Good morning. Today is Monday, September 25th, 2023. Last week, I hosted our monthly capital markets update and outlook. Thank you so much to all of you who joined us both live in person as well as online last week. Again, we really appreciate you taking the time out of your busy schedule to join us during these monthly client check-ins. Again, this is an opportunity each month where we go into more depth on the positives, the headwinds, in both the economy and the stock market, and then what we think it means for the future. If you missed it, if you were not able to join us, the recording is now available on our website. Head on over to our website, to the events page on it, and you'll see from last week's event, you can watch the recording, as well as there's a button to ask a question, as well as download a summary if you don't have the time to watch the 40-minute or so presentation. A nice summary for you to go and grab there. So with that, I'm going to go ahead and roll today's intro, and then we'll take a closer look at what happened in the markets last week. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Rising bond yields and fears of a government shutdown hammered stocks last week, with technology shares bearing the brunt of the retreat. The Dow Jones Industrials Average lost 1.89%, while the Standard & Poor's 500 dropped 2.93%. The NASDAQ Composite Index tumbled 3.62% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, fell 1.77%. Investor sentiment took a decidedly negative turn last week when investors were caught off guard by the Fed signaling another potential rate hike this year, upending hopes that the Fed might finish its current rate hike cycle. Stocks declined sharply following the Federal Open Market Committee announcement and continued to fall the following day as bond yields spiked. The 10-year Treasury yield hit 4.48% on Thursday, touching its highest point in more than 15 years. Stocks also reacted to news that the House of Representatives went into recess on Thursday, increasing the prospect of a government shutdown. The sell-off cooled on Friday, adding only incrementally to the week's accumulated losses. As expected, the Fed held interest rates steady, but surprised many investors by signaling another rate hike before year end and suggesting that rates may need to remain high through 2024. In his post-announcement press conference, Fed Chair Powell remarked the inflation battle would continue and upcoming economic data would inform the FOMC's future rate hike decision. In their economic projections, 12 of 19 Fed officials expect to raise rates once more this year. The FOMC meets again on October 31st through November 1st and again in December. The Fed also lowered their unemployment projection from their June estimate and revised the projection for annual core inflation to 3.7% in the fourth quarter, down from June's 3.9% forecast. As always, we will continue to keep our finger on the pulse of what's really going on in the markets. This week's economic news that we're watching includes a report tomorrow, Tuesday, on consumer confidence, as well as new home sales. Wednesday, we have a report on durable goods orders. Thursday, we have jobless claims reported, as well as GDP, gross domestic product. And then on Friday, wrapping up the week, we have a report on personal income and outlays. One of the things that sets SmartMix apart is that we primarily invest in individual stocks, cutting out the many hidden costs that can be found in today's investment products. Some of the individual companies reporting earnings this week include tomorrow, Costco is reporting, Wednesday, Micron Technology is reporting, and then on Thursday, we have a report from Nike. If we are not investing your life savings for you, you can learn about our low-cost, fully transparent, and personalized approach at smartmixportfolios.com. All right, that's it for today. Thank you for staying until the end. I have another riddle for you. Again, if you are the first person to post the correct answer down in the comments section below this video on your favorite social media platform, we will send you a gift card for coffee on us. So today's riddle is, Hannah went to a local hardware store to buy some small items. One would cost $2, two would run $4, but buying 122 would only cost $6. She purchased 122, yet she was not buying in bulk. She could carry what she bought with one hand. What did she purchase? Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. If you would like the answers to previous week's riddles, you can head on over to our website /riddles to see those answers. And then lastly, later on today, I will be sending out our full economic update. This update includes more than what we talked about here this morning, including our popular weekly tax tip. So if you're not getting this email and would like it, please head on over to our website where you may subscribe. Again, that website address, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.